Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased and honored to have with me for the first time Don Coxe. Don Coxe is, well, he's very well known in Canada. I think perhaps somewhat less known in the United States, but a household name in Canada for sure. He is a strategist and an investor. I mean, he's a lawyer. He studies history. He's an astute economist. He loves music and literature, the classics. And he's been in the business, in the financial arena for some 40 years. So it's just really, really a pleasure to have Don Coxe with us today. Thank you for joining me, Don.
My pleasure.
Really good to have. I mean, I can't believe you're on my show. I think we thank Laura Stein, who's a connection with many guests that we've had. A wonderful lady who we've known for some time, and she connected you with me. So we're really pleased about that. Though I'm not as pleased about the fact that you are no longer managing a couple of commodity funds. They were under the BMO umbrella, I believe. What happened there? I mean, is it just a difference of opinion in terms of markets and where you should be positioned, or what was it, Don?
Yeah, the Coxe Commodity Strategy Fund was a very highly ranked fund, but it didn't fit in with BMO's longer range plans, and so they were closed, and that was just a couple of weeks ago, and so everybody got their money back. But because we had a huge exposure to gold stocks in the Coxe Commodity Strategy Fund, the first 6 months of this year were pretty lustrous.
Yeah. Yes, you could be thankful for that. And so your people got their money back, and at least they didn't get hurt. And well, I mean, if our previous guest Michael Oliver is right, we're moving towards some real strong bull markets in the commodities. Michael believes perhaps with the agri-commodities being the last to join, but he made a call, started talking about major plate tectonic changes in the middle of last year, started calling for the precious metals and commodities and a decline in the equity markets and the bond markets eventually. And he believes that all those things are sort of the stocks and bonds bearish, precious metals and commodities bullish. Are you of a similar mind at this point in time?
Well, at the moment, I'm a neutral on most commodities, simply because we've had tremendous growing weather, and we've got more grain on hand now than we've ever had in the history of humanity, and that is in reserves. And we have, in the case of oil, we got our funds out of oil stocks when, as a result of conversations I had with Saudi people, I concluded that they were going to try to block the Iran deal with the U.S. by driving down oil prices, and that they would only put on any kind of constraints when it was clear that they couldn't do anything more on Iran. So we only got back into the oil stocks basically this year, but it's close, and frankly, because the global economy is softening so much, those commodities that are subject to supply and demand are going to be pretty tough. So the emphasis, in my view, is very much in the precious metals.
Yeah, I listened to a podcast at your website, and I should mention that to my listeners. It's coxeadvisors.com. I guess our listeners are free to go there and follow your work, Don?
Yep.
Okay, coxeadvisors.com. And there's a wonderful podcast that you did giving your view on the markets, and I believe this was back in maybe August sometime, I believe is when that was posted. So obviously your views could have changed a bit. I think you had indicated you were somewhat bullish on oil at that time, and the oil stocks were doing better, but you noted, and you were bullish on it, but you said unless the global economy gets weaker. Your views on that, Don? Do you see? I mean, it's hard for me to be optimistic about the global economy now. But do you see any green shoots anywhere?
No, I don't, because we're coming into winter in the northern hemisphere. And if you look back at the Fed's forecasts, now they've had 5 years of being wrong for the year, but the quarter of the year in which they're most wrong is always the winter. And that now you can't draw a great conclusion from that, except that there's no doubt about it that the U.S. consumer, if they aren't vacationing in Florida or Arizona, is more constrained in the first quarter, and we'll have just come out of an extremely painful election with a residue of bitterness of the kind that I've not seen in my career. I started out working at National Review with William F. Buckley back in the 60s, and I was on the masthead of National Review as a Canadian correspondent for 25 years. So I deeply into American politics, and got to know, through him, I got to know Margaret Thatcher. And so I'm laying out my biases on this. And what concerns me is that there is such bitterness, and there's also a situation where Mrs. Clinton has been pulled very far to the left. I think that this is going to leave, at the very least, a bad taste in consumers' mouths. It's also going to stimulate, I think, bad behavior by bad people abroad. The cat's away, the mouse will play.
Yeah.
So I don't see that there's going to be anything out there in the next 6 months of a kind that will be really good for commodities except the precious metals.
Mm-hmm. The bitter taste in your mouth, and you talked about in your podcast about this growing dissension of the middle class, and you talked about Brexit and some things going on in Italy and the Donald Trump and Bernie Sanders phenomenon. Could you share with us your thoughts on those connecting dots?
Yes, I think that what we're seeing here is something that is, I think your listeners should really be aware of, that this is tied in to something serious that's happened in history. And back in the 20s, a French philosopher wrote a book about la trahison des clercs, that's the French name for it, which is the betrayal of the clerisy. And he was talking at that time about how the intellectual class was letting down people, and this was after World War I. And that he saw that this was going to lead to bad effects because what you were going to have was divisions between the classes in a way. They'd be united in the wars in each country, but now that they were going to be torn apart, and it was going to stimulate very toxic politics, things like that. Well, this is what we've been having in the last 3 years. And the Brexit vote is a sign that Britain has been moving away. We know what's happening in the Eurozone, where once again the elites are being separated from the populace. And then we have this extraordinary American election where Hillary Clinton at one point said to a union group, "I can't understand why I'm not 50 points ahead." And a lot of people would agree with that. But that's the point. If she's not 50 points ahead, let's say she wins by what the polls say, 6 points. And this is the most unlikely candidate ever to run for president of the United States.
Right.
And so what does this tell you? This tells you that there's a deep fissure developing within American society between the academic elites and what they're doing in the universities then to create all kinds of new divisions. And so what you've got then is something that we've not had in the United States previously. And so therefore it's going to take a long time for that particular wound to heal. And therefore I think this is a time where we're more vulnerable, therefore, to an economic setback, because this will not be a time where people feel like spending money freely because they're so embittered. And remember, for so many of them, their view is that Hillary will be forced into radicalism and worse things to happen.
Mm-hmm.
I don't think that's the case, but what we have is that any time that a society loses those almost mystical bonds between the groups,
mm-hmm.
mean they stand together when there's a crisis, we better not have any kind of crisis in the next year, because those bonds in this country are fragile now, and there is a bitterness. There are accusations being made of a kind that you and I both know have never been made in an election campaign before.
Mm-hmm. Mm-hmm. Yeah, it's very deep. I just think that the middle class, to such a great extent, has been losing traction, has been losing their standard of living, their incomes. What do you make about the arguments that Donald Trump talks about how, the good jobs have been exported? I mean, you have been had been, like most of us, most of us have been taught, hey, free markets and international trade is a good thing. You made some comments on your last podcast about how you've changed your thoughts a little bit, at least with respect to some of the trade agreements, I suppose. I would find it hard to believe that you're not in favor of free trade amongst nations. But where do you stand on that? And does Donald Trump have anything? Is he at all on the right track when he talks about good jobs being lost? I mean, I can say as someone who came from Ohio and sort of what's now the Rust Belt, in the 1950s and 1960s, it was a pretty thriving place as heavy industry was still producing, kicking out a lot of goods and exports and so forth. But what are your thoughts on that issue? Does Donald Trump have any merit in that argument?
Well, yes, the answer is that he has merit about the United States' failure to make sure that the terms of the trade deals were enforced.
Uh-huh.
And free trade, I know Robert Gordon, a great economist. He's published a book that changes a lot of people's views. But he pointed out that from the year 325 AD to the year 1770, global GDP did not increase. In the next 2 centuries, global GDP increased by a factor over 150 times. What's the difference between? The difference in between was we started off with free trade, then with capitalism, then with inventions, and inventions which spun off and created new wealth. We haven't seen this happening in recent years. So free trade was a gigantic generator of wealth and progress. But what's happened because of electronic technology, which makes it very difficult for companies and governments to maintain secret material, which means that therefore companies invested a huge amount in getting new products. They get patents, but those what we see is that foreigners can go in and steal those things, and therefore what we don't have are the enforcement mechanisms to enforce what is a really wonderful idea. Mm-hmm. And of course, like the question of if you take the police forces out of a section of a city, you shouldn't be surprised if the crime rate goes up. Does that mean that the city is prone to crime? No. It means that part of the structure that makes the city work is impaired. And that's my reservation. And so he's a blunderbuss approach on this. Mm-hmm. But on the other hand, when you're talking to a lot of people who say, why is it we're losing out? It does no good to simply say we're going to get a new big TPP treaty at this time. So that's, I think that reinforces the splits in society. And the reason Britain pulled out, of course, out of Europe is because there it's quite the reverse. It's that they're being enforced regulations on them at an unbelievable pace. Boris Johnson, who's a really brilliant guy, pointed out that 68% of all legislation passed in the British Houses of Parliament in the last 3 years is simply putting into law regulations prepared by committees in the Eurozone. And he said they're out of control. And he even pointed out that last year they passed a law making it illegal to have different sizes of condoms in Britain because they'd come up with a Euro condom, one size fits all. And so the Parliament had to pass a law like that. Now, that shows you what happens when you get one segment of society that's not answerable to anybody, that can change the rules. So what I think is, when we're talking about why it is the economy isn't doing so well and everything, in the Eurozone, you got these exploding regulations, and over here, people no longer have the same faith they have that the government is going to protect them. So this makes it open for cynicism, and all of this means pessimism. It also means that the people tend to then put their money into what they think is the most obvious. So that's one of the reasons why we have the stock market outperforming. If you just buy the index, that you outperform, because these are the companies that are well placed. They buy back their own stock, and what they're not doing is taking risks. So there's so many things that are corroding the DNA of capitalism. Those are things why it is, frankly, it's one of the reasons why I believe you got to look at precious metals, because gold, you see, doesn't need any of this. Gold has always been around. It can't be duplicated. And what it does is it's always the thing that says you can always trust this when you aren't sure what else you can trust. And you may say, well, that's a pure psychological attitude. Yes, but all valuations fundamentally become psychological. You've got to have some concept before you get enthusiastic or negative about things. You should have facts for them, but the way you're drawn to something is your own set of priorities about what it matters to you most and what matters to you least.
Yeah. Well, with respect to the destruction of capitalism, we've had David Stockman on this show a number of times, and you know, he makes the point, and I would just like to get your response to this. He makes the point that, you know, how can you have capitalism if you don't allow price discovery of capital? That is, if the central banks manipulate the markets for capital, driving down interest rates to some whatever perceived level they should be for whatever purposes that the people that sit around those big tables in Washington think they should be. I mean, does he have a point? Absolutely, because that when you take away the interest rate mechanism, what you do is you are doing something big. You know, Einstein said the most powerful force in the universe is the law of compound interest. Now, when you go down to negative interest rates, this is the equivalent of what happened, but they overcame it, when they went to jet planes, marvelous British film, Breaking the Sound Barrier, about one of the developers, and he was killed flying an early jet plane. They found out there was a sound barrier because when they broke through it, the plane broke up, so they had to come up with different technologies to deal with an invisible barrier. So what we're doing now, or the Eurozone, there's 12 trillion of negative yielding bonds. And these economists, we are ruled by a new ruling class of PhDs in economics. Back as far as the French Revolution, Edmund Burke, the great British philosopher of the time, says we have too many economists. He was saying that in 1793. Well, now what we have is the Federal Reserve itself is made up as PhDs in economics. It used to have, in the Open Market Committee, lots of bankers on it. No. So we needed those elites to rescue us back in the crash, which was created by other elites, PhDs in physics, who were called in to design these complex mortgage products, which it turned out nobody understood, and they blew up. So there's another example where what you have is an elite group which is not responsive to the public, and the public even doesn't even know about them much. And what they have, it's not that they're crooks, it's not that they have evil intent or a hidden agenda, it's that they have too much power accorded to them in a system that is much more complex than they understand. Yeah, well, they've been led to believe that the Keynesian models they were brought up with, or would serve them well. And it seems to me, Don, that they can't really bring themselves to ever admit that maybe they were wrong. I mean, I don't know your position on this, but it certainly seems as though the 1930s remedies were not very effective. They certainly didn't work very well for quite a while, and yet we tried to do the same thing. Mr. Bernanke promised Milton Friedman before Friedman passed away that they wouldn't make the same mistakes again. This time, by golly, they're going to fix it for sure. And then comes along 2008, 2009, and Don, we're in worse shape than we've ever been, using the same but more of the same policies. Would you agree?
Well, I think there's twists. What they did not do was make the error that had been made in the Depression time, which was to reduce the money supply growth. This time, what they did, so he lived up to that promise. This time, they expanded the money supply exponentially in a way that Milton Friedman could never have imagined. So what they did was, in their ardor to escape making the mistake that was made in 1931, they've come up with this one, which nobody had thought about, that you could quadruple the Fed's balance sheet, leading eventually to negative interest rates and all of these new formulations. But what you can say is they didn't make the same mistake. But what happened in each case was that the Federal Reserve became at the center of the system, so that the system didn't have its own built-in ways of dealing with the problem. It was all being managed by some elites. Yeah. And so I'm not against elites. I mean, for example, in medical science, you better have an elite doctor.
Sure.
But I'm against elites who are not really directly responsive to the public and who don't have, there's not one of them that ever had to meet a payroll.
Yeah. No, that's right. That's a good point. Don, with just about a minute left yet, I observed Heidi Richardson at BlackRock a couple of weeks ago. I think it was on Bloomberg. Very bullish on gold, and she's suggesting we might see a new high within 2 years or so. Do you think that's a possibility?
Yeah, because remember, major gold bull and bear markets aren't driven by believers in gold. They're driven by the exits and entrance into gold and gold mining stocks of true believers in bonds and stocks as the only routes to financial security and prosperity. So when it's people that give up on the other alternatives, when they're forced into it, they come in. And that's why we had this preposterous situation where, with Greece being forced out of the European Union, we had a $400 move in gold over a 2% move in the European Union. Something like that is going to happen, where people are forced out of the conventional assets, and that's going to certainly happen within the next 2 years. It could happen in the next 6 months, but I got a book coming out on gold, and we're looking at that.
Don, when you have that ready, we want to have you back and talk about that a little bit more.